Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 4th through September 8th, where we'll try to help you make money trading in September. We'll talk about historically how the markets perform in September, and traditionally, again, how the markets perform in September, and some strategies, trade ideas of how we can help you make money trading in September. So let's get started. Good morning, Nagam. Thank you for joining us in the live chat today. Hope you're doing well. So here's our notes for our weekly trading game plan, part one for the trading week of September 4th through September 8th. We keep our notes in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. In our notes, we have bonus links to bonus videos, links to the tools and resources we use for our market analysis, our trade ideas, our strategies, etc. We keep our notes Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks, and you can find a direct link to this Google Drive folder also in the description box below. So let's take a look at how the markets ended up on Friday. Jump over to the homepage of FinViz. Welcome to Ricky Khan. Thank you for joining us. Hopefully you're doing well. So we see the markets were pretty flat. Again, this was a Friday before a long holiday weekend. So, typically volume drops off towards the end of the day. So again, all the indices were pretty flat for the day. We had more advances than decliners, 61% advancing, 33 declining, 65% new highs, 34% new lows. Got about a 50-50 split, a little below 50% above their 50-day moving average, so 46.53, and about a 50-50 split above and below their 200-day. So again, pretty flat. Everything pretty flat. Slightly bullish towards the end of the day. We saw market on close, green candle, so slightly bullish going into the holiday weekend. See the heat map, Tesla down, Nvidia down, probably some profit taking again into the holiday weekend. Other FANGs, some positive, some negative. So again, pretty mixed, typical for a Friday going into a long holiday weekend. Good morning, MD. Thank you for joining us. Hope you're doing well. So we see Walmart cruises to all-time high. So Walmart's doing very well. Stormy September. Again, we'll talk about traditionally how September performs. Stormy September for U.S. stocks may lie ahead. Tesla cut prices. That's part of the drop. Stock traders get back to believing everything is just perfect. We'll look at the economic data that we got and the impact of that. We saw oil surge up above 85. You can see that trend. So oil's been very strong. Again, broke that resistance at 85 and continuing to head up. Natural gas, again, pretty range bound between 250 and 3, but trying to break that 275 mark. Gold broke that resistance at 1950. We'll see it's kind of bouncing now between about 1980 and 1950. So nice pop in gold. We see the Dow and S&P are showing positive in the futures, NASDAQ negative. Dollar strengthened. We'll see the DXY got back up over 104. So most of your foreign currencies are weak against the dollar. And again, on Friday, we saw the treasuries rebound, and they're back up close to 4.3 for the 5 and the 30. And again, we still got an inverted yield curve with the 10-year about 4.17. Welcome, Flip of the Shippa, Ali in the Bay, Ellen Krantz. Thank you all for joining us. Alan asks if the hurricane got us. No, Idalia crossed in the Big Bend area on the Gulf side of Florida, and we are on the East Coast in Central Florida and Melbourne Beach. So we got a little bit of wind. It was rainy for the first part of the week, but nothing really for Idalia. Thank you for asking. We appreciate it. So before I go to the groups, let's look at the indices. So we see again the SPY is bouncing between the support level and the resistance level in this upwardly trend channel. It's above its moving averages. But again, just kind of bouncing in this channel right now. We'll look at the weeklies. So again, nice upward trend. We'll see if we test, we'll get resistance at this previous high, and we've got some room above the near-term moving average. So we'll see. I expect we'll get some resistance from that high, and again, we'll talk about the seasonality effect for September and the psychology that will generally have on traders. Look at the Qs. Been very similar. It's still floating above its moving average. Had a nice bounce this week. Again, below the previous high. So again, we'll see resistance at that high. I would, again, for both the SPY and NASDAQ, expect a rejection off of that previous high. And then again, we'll see if the seasonality typically for September plays out. Same thing for the Dow. The Dow did bounce off that moving average, got good support, bounced back up. Again, it's been a little flatter. Again, we see that support level it's holding from the previous high. And again, I would expect it to, test the previous high, get rejected, bounce back down. Again, the range on the Dow is probably smaller because of the moving averages. Look at the IWM. Again, had a nice bounce this week. Again, very similar to what we saw in the Dow. Bounced off the moving average, got support there, had a nice rebound. It's got some room before the testing the previous high. We can see that range just below 200 is a pretty strong resistance pivot point there. So again, I'd expect possibly we get a pop in the Russell testing that resistance, and then probably a rejection very similar to what we've seen the past couple times. Look at the VIX. We'll see, very little volatility. Briefly went up into the 18s or so, and very quickly is retracing. Every time we're seeing a pop in the VIX, it retraces relatively quickly. I think right now the actual VIX is in the 13s, so very low fear, very low volatility right now. And again, we're coming out of the summer doldrums, headed into September, and the effect, what they call the September effect that we'll talk about, might give us a little more volatility. But again, the trend is any pop is retracing quite quickly. Good morning, Walter Lyons. Hope you're doing well. Thank you for joining us. You grab a quick drink and we'll look at the groups and industries for the week. Just a quick reminder, and I put the banner up with our disclaimers that we're not financial advisors. None of our content should be considered financial advice. All of our content is for education and entertainment purposes only, but we hope it helps you. So if we look at the groups and sectors for Friday, we see energy, basic materials, financials. We'll see energy's been strong. Again, we've talked about this rotation back into energy. See the weakest were your defensives on Friday, utilities, consumer defensives. And again, part of that is the resurgence in the 10-year yield. So your interest-sensitive sectors took a hit, particularly utilities, some real estate. For the week, technology was strong. Again, we see energy moving up, basic materials moving back up. Again, the weakest was utilities. And we talked about kind of the seasonal sector rotation out of utilities and how we're watching that. Real estate kind of in the middle. Again, for the month, energy, technology, communication services, weakest, consumer defensive utilities. And the same thing for the quarter, energy and consumer defensive utilities negative. So again, as we've talked about, we'll look for that seasonality shift back into utilities in the next couple months as well. And again, that has to do with the 10-year yield and interest rate sensitive sectors. Look at the industries. So we'll see energy, we'll see basic materials, see oil. Uranium still positive. Some of the REITs did okay. See discount stores, Dollar General reported poor guidance going forward, so discount stores took a hit. I think BJ's didn't report very good earnings either, although Walmart's doing well. See silver's negative. That was more of a retracement, as we'll see in the futures. Gold slightly negative, but again, a slight retracement. So again, basic materials, energy, some retailers, some REITs. Pharmaceutical retailers and healthcare, negative. Utilities. Again, we saw uranium strong, oil, energy strong. And again, solar is very split. It rotates in and out pretty strongly. So again, for the month, it was pretty weak. And energy, some basic materials for the quarter. And again, we see solar was very negative for the quarter. Silver and gold are making a rebound that we'll see. Alan Krantz says Saudi Arabia cutting back again. So again, holding. They're extending their cuts, I think, for another month, and that's going to, hold the price of oil up, as we'll see. So we looked at the sectors and industries. I'll bring up the economic calendar. We'll talk about some of the highlights from this past week, and then we'll look at what's coming up for the next week. Just a quick reminder, as this economic data comes out, the important economic data, I try to post it as near to real time as I can in a channel in our Discord, Surf the Markets channel in our Discord. Our Discord is free to join. You can find an invite in the description box below. We have all kinds of channels where you can discuss different types of trading and also get different asset classes and also get this news in real time. So you can see I'll post a snippet from investing.com and also the raw data as quickly as possible as this data comes out. So join our Discord to get this real-time economic data as quickly as possible. Okay, let me grab a quick drink and we'll go over the highlights. Welcome, Daniel D. Easy Mike. Good to see you. Hope you're doing well. Okay, so nothing really notable on Monday. Tuesday, we got home prices. You see home prices are still going up slightly. Then we got the JOLTS data, and the JOLTS data was positive, so open jobs is decreasing. This is something that Jay Powell has pointed out several times, is the ratio of people looking for work to open jobs. So the number of open jobs went down, so that's positive in terms of more competition in the job market. And so, inflation in the job market. And again, that was received positively. So again, we saw this pop in the markets for this week, and this was one of the economic data points that was perceived as being positive. in terms of inflation. So the percentage of the probability of rate hikes for September and November on the Fed rate monitoring tool went down based on that data. Wednesday, we can see mortgage rates pretty steady here. So mortgage applications was positive. Again, at that point, the mortgage rates were steady. Now we're seeing a resurgence again in the 10-year yield. So mortgage rates are probably going to go up again. Then we got non-farm employment change was positive, but below expectations. So again, job market, as we'll see in all this data, the job market is weakening a bit, but is pretty resilient. We also got the PCE prices, and it was below expectations. So this is a consumer price index core. This is one that the Fed also looks at. So again, it was below expectations. Again, that's perceived positively by the market as the inflation slowly coming down. Corporate profits still positive. GDP was positive but below expectations. So again, it's still positive. We're not in a recession as of Q2, but the economy is slowing. Again, prices, PCE prices was below expectations. I thought this was interesting as consumer spending is still above expectations. So the consumer's still spending. Got job cuts on Thursday. So again, more job cuts. So again, tightening of the labor market. Initial jobless claims was again below expectations. So again, fewer than expected people losing jobs, even though the job cuts is going down. So again, the labor market is tightening up. It's still relatively resilient. Core PCE prices, again, as expected. Price index, pretty much as expected. Personal income was a little bit below. So again, salary, wage inflation is coming down. Again, with the tightening of the labor market, that would kind of be expected. Again, personal spending is still above expectations, and consumption is still, people are still out spending money on stuff, services more so than goods. Friday, then we got the jobs data. So hourly earnings was below expectations. So again, wage inflation is below expectations. Got non-farm payrolls was above expectations. So again, the resiliency of the job market, and again, that means the Fed can continue to hike without fear of unemployment, increasing too high. Although we did see this significant jump, the expected unemployment rate was 3.5, came in at 3.8. The participation rate is going up. So all these are positive signs that the Fed, is getting the economy where they want it without fear of rampant unemployment, and inflation slowly coming down. It's just going to take, time. So we'll look at the other economic data from last week, see if I missed anything. Check the chat, see if anybody's pointing out anything. Just a quick reminder, as you know, markets are closed on Monday in observance of Labor Day, so we have a nice long holiday weekend. So we hope you all are able to enjoy that. Family, friends, recreation. So quickly look at the economic data from last week and then jump into next week. So we see here's the Treasury auction. Someone was asking in one of the chats where you can see the Treasury auction times. So you can see them in the investing.com economic calendar. You can also see how the rate of the actual auction performed. Talked about housing. We talked about JOLTS. Crude oil stock went down more than expected. So again, oil prices went up. Talked about PCE and jobs data. Crude oil inventories, again, down more than expected. Talked about job cuts. jobless claims, natural gas storage, a build greater than expected, but again, we're still seeing, natural gas prices slowly work their way up. Here's some more Treasury auctions. Friday, we got jobs data. We talked about that. Got ISM manufacturing was actually construction spending was positive. New orders went down. PMI is a little bit higher, so there's still some inflation in the manufacturing end, and rig counts was stable. So the past couple weeks, we saw the rig counts going down. The total rig count went down a little bit. Oil was stable. So it looks like U.S. producers have stopped cutting rigs, at least for this time. And again, since we saw the oil price go up, they're probably not cutting at this time. And as I believe Alan mentioned, Saudi Arabia is extending their oil cuts, I believe, into October. So we'll look at the economic data coming up. Again, markets are closed for Monday, for Labor Day. Got durable goods, factory orders. So again, front end of the supply chain. Got some bond auctions, mortgage rates, some ISM data on Wednesday. Typical oil and natural gas. We got jobless claims data on Thursday. We've got some Fed officials talking. So not a whole lot of market-moving economic data coming out next week. And again, it's a holiday week, so we might have lower volumes, people off for an extended holiday for the Labor Day week. Just checking the chat real quick. Glad to see you all sharing additional ideas. So we're still in earnings season, although we're pretty much winding down. So earnings still matter. Just a reminder, too, the next FOMC meeting is the 19th and 20th of September, so we've got a couple weeks before we get an actual decision. And as we discussed with all this positively perceived economic data, the probabilities of a rate hike both in September and November when the Fed rate monitoring tool went down, although in my humble opinion, I think the Fed will probably still hike 25 basis points in either September or November, probably possibly in November at this point. Again, not financial advice, just my humble opinion. So we can see who's reporting earnings. Again, pretty much winding down. You can go through this whole list, see if there's anybody significant to you. Got some Asana, some cloud providers, Zscaler, so software, UiPath, it's automation, kind of they'll talk about AI, C3 AI, so it looks like we've got some more AI hype potential. Some retailers, DocuSign. So again, we'll probably hear some additional AI hype and see if that has any impact. Kroger, so some grocers, some retailers. So again, not nearly as many as we have. We're winding down. So if there's anything that's significant to your trading, you can find that in the earnings calendar at investing.com. And again, you can hear our video about some strategies about how to trade around earnings. So now we'll jump over to Webull and look at the market screen real quick. So here's the market screen of the online browser version of Webull. Just a quick reminder, if you're not already using Webull, you can see we use it for market analysis, due diligence, a lot of our trading. And if you're not already using Webull, you can still get up to 12 free stocks by opening and funding an account. And if you use our affiliate link in the description box below, you can also help support our channel, which we greatly appreciate. And they're still offering a 5% interest rate on uninvested cash. So back to the market screen, the online browser version of Webull, we can see on Friday we had about 2-to-1 advancers to decliners. Percentage of advancement was very small. Percentage of decline pretty small. Quite a few in the unchanged. And as we've seen, NYSE inflow on Friday, outflow out of NASDAQ. Again, probably significant profit taking. We've seen that for a couple weeks. Again, you can see a near-term earnings calendar here in the calendar section in Webull. Again, we're winding down, so you can see who's reporting in the near term. Here's somebody reporting during market hours. You've got before market open, after market close. See the estimates. Look at the best performing industries for the week. So home building, construction, communication, somewhat positive. Well, energy is positive. Business education, specialty retailers. So energy, renewable energy, not bad. Packaging. Again, energy, oil and natural gas, metals and mining, kind of slightly positive. Semiconductors, positive. Let me grab a quick drink and we'll look at the ETFs. So yeah, China had a positive day on Friday. So we're seeing up on China, emerging markets, small caps. So up on the Russell, up on small caps, mid caps, up on the Dow, mid cap, S&P. So again, quite a reversal from what we saw last week. So small cap, mid cap. So again, for the Russell. So we see again in the Russell, small caps up on the Russell. So again, as we pointed out in the indices, it looks like we might see a rotation into the Russell, into small caps, mid caps. Bitcoin short. So again, after the news of the court decision that the SEC needed to revise their decision process on Bitcoin got a surge along with all the ETFs related. And then we see a reversion now, short on Bitcoin, short on the euro, yen, short on the VIX, bullish on the dollar. So as Walter Lyons pointed out, on Friday, the dollar DXY surged back over 104, as we'll see. So again, Russell positive. And up on China, short on Europe. And Qs, short on the Qs, short on the NASDAQ. Industries, industrials, healthcare, energy, negative utility, communication, basic materials positive, technology positive, defensive negative, real estate split, financial services kind of a rebound, commodities, platinum positive, livestock, carbon, energy, platinum. We see, Asia, 3 to 7 treasuries, preferred, REITs preferred, Asia, private credit. Easy Mike's been talking about private credit opportunities. Here's an ETF, VPC. I'm not familiar with that offhand, but I know Easy Mike's been talking about opportunities in private credit, right? Yuan positive, pretty much all the other foreign currencies negative. So if we look at the futures in FinBiz, grab a quick drink. Okay, so similarly in the futures, we can see all the indices had a positive week, kind of peaked out. You can see they're below their previous highs and looks like they're kind of rolling over at this point. Again, the Russell's on an upward trend, so we're seeing, that momentum it looks like is in the Russell right now. Again, all the other indices looks like the Dow rolled over first, and then the S&P and the Nasdaq looks like they're potentially rolling over. See, Nikkei is headed back up right now. The Euro stocks has kind of been bouncing. It's pretty volatile if you're short-term trading some of these foreign markets. We've talked about opportunities, how to trade Euro stocks, how to trade the DAX. Again, you see some short-term volatility there, possibly some opportunities. Again, we see every time the VIX pops up, you see how the futures, when they roll the futures contracts forward, we get a little pop, peaks, retraces very quickly. See that surge in oil. So again, 80 is pretty good support. Broke through 85. We'll see if it's headed up to 90. Again, 85 will provide some support, so it may oscillate around 85 at this point. And natural gas pretty much range bound from 250 to 3. It keeps testing the 280 area. So we'll see if it gets support around that 275, 280 and retest 3. Again, gold's got some support at around 1950. You see it tests that area, bounces up. Now resistance at that 1980 is pretty steady resistance. So we'll see if it can break and hold above there. Same thing, we saw a nice gap up in silver, up above 25. It retraced. You can see it kind of needed to fill that gap. So now it's filled that gap. So we'll see if it bounces back up and retest 25. Again, it'll have to hold 25 to, make a further trend up. Again, platinum had a nice run up. Palladium hasn't really participated in that. So maybe an opportunity there. There's an ETF where I've tried to trade a couple times, PALL, kind of given up due to its illiquid, choppy nature. But if you want to try that, PALL is a ETF on palladium. See some of the other agricultural commodities kind of decrease some. So corn's down, wheat's kind of down, but relatively speaking, if you zoom these charts out, it's still relatively high. And we have some ETFs, so you can see where the support level is in those ETFs. And then again, we see the volatility in the treasuries. Yields had come down, prices had increased. Then on Friday, we saw yields bounce back up, prices decrease. And again, we see that resurgence in the dollar back up to 104. So the euro's back down to 107. So dollar strength, weakness in the treasuries, higher yields. So we'll go to our ETF spreadsheet, look at ETF opportunities. If there's any category, index, commodity, etc., that anyone in the chat would like us to specifically look at in the ETFs, we can do that. Just a quick reminder, if you'd like access to this ETF Google Sheet, as well as our dividend payers and our puts ROIC Google Sheets that we'll review tomorrow, you can get 24/7 access to all of these tools by joining our Patreon at the All Access or VIP level. And you can find a link to our Patreon in the notes as well as in the description box below. And we also have a series of videos on how you can use this ETF Google Sheet to identify opportunities, take advantage of opportunities in our ETFs playlist. So we talked about some of the news with Bitcoin. We've got, several ETFs. You can play Bitcoin long, short. We also have a couple on cryptocurrency. So you can see we're currently long block. You can also use BitQ. So if you don't want to trade Bitcoin or cryptocurrencies directly, there are a number of ETFs. And again, you can long or short using those ETFs. So we hope that helps. There was also news on cannabis this week. The HHS had recommended decreasing the schedule for marijuana. And so we saw a pop in MJ, MSOS, also in some of the pot stocks, Tilray, etc. So, and we'll look at this specifically. We were long MJ, and we'll talk about that trade tomorrow. China, yin and yang. We've talked about this quite frequently. Again, we saw a pop in China on Friday, so yen had a nice pop. Again, you can short-term trade China in general without having to hold Chinese stocks directly with yin or yang. There's also a number of others, CWeb, KWeb, etc. Plenty of energies. We've got, you can trade different markets. We've talked about the Euro stocks, the DAX, etc. Talked about gold. Short-term natural gas, oil long, cold short, oil gush long, drip short. Again, plenty of opportunities, to trade these short-term day trade, scalp, etc. Talked about PALL, so you can see it's pretty close to its support level, pretty close to its 52-week low. So again, kind of illiquid, choppy. So I'm not pursuing PAL at this point, but if you want to trade palladium, semiconductors hasn't really had a lot of movement lately. Nvidia's been up and down, but you can trade semiconductors short term. SOXA, SOXL, we made good money trading those. Silver, when silver runs, AGQ. Talked about treasuries. We've been watching, TLT for a bottom. You can see it's close, but TBT to short. And then we're going to talk about UTSL tomorrow. We talked about this seasonality trend in utilities. So the XLU is the sector spider for utilities. And tomorrow, again, we'll talk about this opportunity potentially in UTSL. Again, we saw utilities have been, down for the month, the quarter. And then, we've got others that you can trade, some of the other commodities, wheat, etc. So again, if anyone in the chat has any others you'd like to look at right now, just let me know. Just another kind of news topic you're going to hear on the news is they're talking about another potential government shutdown. I guess the Treasury is going to run out of money this month, and they're going to have to cut another deal, to avoid a government shutdown. Short term, in my humble opinion, that may be negative for defense contractors. There's always a risk if they have a shutdown. They'll be shut down for a little while, and I think there's, that causes negative sentiment in some of the defense contractors. But again, in my humble opinion, they always cut some kind of last minute deal, kick it down the can. But again, if you see an opportunity relative to that, I hope that helps. Okay, let's talk about our theme for the week and our strategies about how to make money trading in September. So we've got a couple of short videos that will come out probably this week that talk about how do the stock markets perform in the month of September, what are the best performing sectors and industries in the month of September, and you can access those short videos now via the bonus links in the notes or in the description to this video. We've also done a previous video that goes into more depth on what is the September effect. Historically, how do the markets perform in September? What are some of the causes for that? So again, you can listen to that more detailed video on the September effect via the link in the notes or in the description box below. I'll bring up the chart for our typical monthly performance chart for the various months. And as we've talked, you can see September is historically the worst trading month of the year. Again, historically, we've been talking that August is typically a slightly negative month. September is the bottom. Then we get a recovery into the end of the year. So October, November, December are positive. So again, well, quickly, I'm going to jump over to investing.com. We'll see how August this year actually performed. But again, typically, historically, what they call the September effect. The September is typically a negative month. So we want to position ourselves and have strategies ready to trade a negative September if that were to manifest itself. So again, we have a number of videos on how to trade bear markets, how to use inverse ETFs to trade a downwardly trending market. So you can find those videos, those strategies in our BeachBum Trading YouTube channel. So if we look at market performance for August, so we can see again the Dow slightly negative, S&P slightly positive, NASDAQ slightly positive, and the Russell slightly negative. So again, very, very small. And again, we just saw, typically August is just slightly negative. And so overall, that's kind of what we're seeing. So we're kind of seeing the markets return to a more historical trend. So if that continues, again, then we can rely more on some of these seasonality predictions and at least position ourselves accordingly. So I hope that all helps. So we also have a number of videos on how to trade the stock market doldrums, how do markets perform in the summer. So as we transition from summer to fall, you can use those strategies as we end up in the summer as well. So I'll also look at the technology components. Again, in our ETF Google Sheet, we have on the screeners tab, we have a number of screeners you can use to identify opportunities, one of which is the technology components. So we can see how the technology components are performing right now. And I thought this was kind of interesting as now we're seeing, a downwardly trending channel, a short-term downwardly trending channel, and a longer-term upwardly trending channel for both the FANGs, the semiconductors, SOXL, and the NASDAQ as a whole. And we see all of those just recently broke out of that downwardly trending channel. So short-term positive momentum. You see they're respecting that support line downward, that lower support line pretty well. So again, we'll see if it holds above that upper trend line in this recent channel and continues up, or if it breaks back down and gets bound in those channels again. Biotechs are very different. You can see it has this double bottom support level, and that seems to be pretty good support. So if you want to, trade biotechs long, that support level looks like a pretty good support level. And then you see it gets rejected off of that moving average. So again, the trend, is narrowing, got good support, but not really breaking out at this point for biotechs. So I hope that helps. And again, you can see a number of other screeners. And again, all these tools are available to you at any time. If you join our Patreon and get access to our Google Sheet, as well as our dividend payers and our puts ROIC Google Sheets, which we will talk about in more detail tomorrow. So let me grab a drink and quickly check the chat. If you asked a question already and I missed your question, I apologize. Please throw it back up in the chat, and I'll try to answer as many questions as we have time for today. Okay, again, just talk about some biotechs. Again, someone's pointing out a specific biotech. Biotechs, yeah, they can have pops if they get positive news. They can, drop pretty quickly. A lot of times they'll drop an offering. Most of them are losing money, have high cash burn. So, just be careful in this current environment. We've talked about biotechs and our view on that many times. And again, Flip is pointing out a depression for biotechs, again, with the high interest rates, the TINA effect, right? There is no alternative. Well, now it's TARA. There are reasonable alternatives. And if you can get 5% treasuries or 5% in a money market, you don't have to take the risk in a high risk biotech, whereas in a low interest rate environment, that was a place to find yield. Okay, so if anyone has any further questions, please feel free to reach out to us via comments and for this video. You can also ask us in the Discord. Just tag us in the Discord with any question you might have, or stock you'd like us to look at, do due diligence on, etc. Just tag us. We're BeachBum Trading in the Discord, all lowercase, no pounds, no numbers, etc. You can also find links to our social media. We also have a Facebook group, a Reddit community, and you can find an invite to our Discord and links to all of our social media on our homepage, which is beachbumtrading.com, bum without the U. So again, plenty of ways you can ask us questions, and we'll try to get back to you as soon as we're able. And we're always open to suggestions about how we can improve any of our videos, including our weekly trading plans, etc., as well as our systems and community. How can we add more value for all of our fellow Beach Bum traders? So again, we appreciate your feedback and suggestions, and we do also have a suggestion box in our Discord, so you can tell us your suggestions via any of these mechanisms. How can we make our community of the most value for all of our fellow Beach Bum traders? And we'll do what we're able, and we appreciate it. So again, if you have anything you'd like us to look at, let us know, and we hope you all come back tomorrow for part 2 of our weekly trading game plan for September 4th through September 8th, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, how we manage our shopping list, additional strategies and trading ideas for how to make money trading in September, and specifically for the week of September 4th through September 8th. Same bat time, same bat channel, 10 a.m. Eastern for part 2 for our top swing trading stocks to watch. And again, thank you for watching, and thank you for everyone that participated in the live chat, and we'll see you all tomorrow. Thank you. Bye.